Now we are going to explain how we get a buy signal, which is the equivalent of a primary bull market. We have the Dow Industrials. Let's imagine there is a bear market. The market is going down. The same applies to the transportation. DT is a bear market. The market is going down. We are making lower highs and lower lows. And then suddenly we make a lower low, but then there comes a rally, lower lows, and then there comes a rally. Let's make it a little bit shorter. And then this rally, once again, lasts at least 3 calendar weeks, 3 weeks, and rises at least 3%. This is what we call the time and extent requirement for a secondary reaction. So we have the time requirement, we want 3 weeks, and the extent requirement, we want at least a rally of 3%, both confirmed. So once again, the principle of confirmation, both must be confirmed. And if the rally does not meet either the time or the extent requirement, then this is immaterial, irrelevant for us Dow theories. So we don't get nothing. So, okay, we get this rally. I mean, that must be at least, it can be 3% or more. So we get this rally, and as with the previous explanation of the sell signal, what happens afterwards is vital. We had the rally, and then the market drops, and here the same, there is a drop, but look, this new drop does not break down below the last recorded bear market lows. So these are the lowest lows of the bear market, and as you can see, I make a projection of the last primary bear market lows, and the pullback that follows the secondary reaction does not manage to break down those lows. Because if it broke down below those lows, it could be a reconfirmation of the bear market. It would be as we had previously, lower low, lower low, lower low, lower low confirmed. So if here we had a lower low and a lower low confirmed, it would reaffirm the primary bear market, so no buy signal. But here we're studying the setup for a buy signal. So we've had this secondary reaction, 3 weeks and at least 3% rally. And then what happens next is vital, because this is going to set up a signal, the potential buy signal. Then here we demand a pullback that must be 3% at least, pullback, and it must last 2 or more days. Here the same, we want to have a small rally. It should be at least 2 or more days, and 3%. As with the buy signal we explained before, we only require confirmation for the 2 days rally, this newest rally, on both indexes. But we don't require confirmation for the 3%. So either the Dow Industrials or the Dow Transportation must rally 3%. So even without confirmation, so let's say that one rallies 3% and the other one rallies 2%, even without confirmation, the setup would be completed. It's the only exception to the principle of confirmation. So, okay, we've had this rally, and then what follows is vital. Look, we've had this rally, and then we make a projection of the secondary reaction highs, this, and this is the secondary reaction highs, the projection. And if after this brief pullback, the Dow Industrials and the Dow Transportation break up above this level, confirm, here we require confirmation, then this is a buy signal. And here we get a buy signal. I will briefly recap. So we have a bear market there, and it's going down, lower highs, lower lows, confirmed in both indices. Then, well, we reach a final low, and then after this low, there is what I would call, a secondary reaction, which means that this rally lasts 3 weeks and rallies at least 3% or more on both indexes. And you could say, okay, but this is the very same thing we have seen before. Yes, because what happens next is what is vital. So after this rally, and this rally being 3 weeks or more and 3% or more confirmed, means that this is a secondary reaction. So then, after we have this secondary reaction, as we could have had here, 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 what happens next is vital. Then we have this 2 days or more pullback, and this pullback should be at least 3% in one of the two indices. If it's confirmed, much better, but we don't require 3% in the two of them. And then we get a new rally, and then if this rally breaks up above the secondary reaction highs, remember this was a secondary reaction, if it breaks above the secondary reaction highs, here and here, then we get the buy signal.